Now let's imagine, how would the landscape of finance and fintech world look in 5 years? To discuss all this and much more, please give a warm welcome to our moderator, Gerald Perez, CEO at Interactive Brokers UK, who will introduce his panel. Gary, the floor is yours.
Thank you very much. So we're here at the very end of today's wonderful day. And I appreciate you staying with us. Today we've got a nice panel of experts that are going to give you a little bit of insight about online trading. Online trading, what's the future of tomorrow? It's a very important topic, a lot of changes in the industry from technology, regulation, commissions, and how best to perform. A little bit of a Q&A at the end of this. We'll be going out to the audience, but for now, let me introduce our panelists and let them give the floor, introduce themselves. Go right ahead, John.
Hello, everyone. John Murillo, Chief Dealing Officer at B2 Brokers. We're a technology and liquidity provider. Essentially, I've been in the capital markets close to 23 years, and we're here today to have a fantastic and open mind discussion.
Hi, everyone. My name is Avner Ziv, the CEO of Zotapay. Zotapay is a payment provider in emerging markets, China, Southeast Asia, Africa, LATAM, and where it's more difficult than other traditional markets. I'm very happy to be here again. I think it's my 7th time here already, and I'm very happy to be again. By the way, you have headsets. If you can hear us, you have headsets, you can hear it much better.
Brendan Callan, CEO of FXCM. Thanks for staying so late in the day, even given there's an open bar, I'm told. FXCM is a retail FX and CFD broker. We have an institutional arm, and during the week of magnets, we're here promoting that. They do institutional B2B liquidity and clearing services.
Yeah. Hi, Dan Boneham from IG. Thank you for the invite. So IG are primarily a retail brokerage across the UK, Europe, APAC, and the US. But we also have an institutional arm as well. So I'm here as head of product, primarily looking after our offering covering CFDs, spread betting, and our investment products.
Hi everyone, Alessandro Capuano. I am head of Europe for Capital.com. Capital.com is a CFD and FX provider. We are a global fintech operating in many countries. And thank you very much for the invitation today. I'm here mainly to represent Europe for Capital.
That's great. And I think we're going to start off with one very basic question to all our panelists. What is the future of online trading? Let me start with you.
I think we've seen the likes of eToro. It's Robinhood has made has provided traders easy access to markets. It's a type of platform that has introduced simplicity, and I think we have more of that to come in the upcoming years.
Yes, for me, the future of online trading is basically focused on how to bring new traders. From payments point of view, is how we enable retail brokers the access with so-called non-bank population, emerging markets traders and end users, which we believe that they will have more accounts in retail brokers and CFDs and shares providers rather than the local banks. And so for us is how we gain or bring more traders into the cycle, how we can allocate the funds and pull in the funds from these very difficult regions to process funds from into Europe or other places that the mega brokers are in.
I think the future is exciting. I think it's dynamic. I think it's challenging. We here on the panel, and I imagine most of the people that show, try to address the very active investor demographic, and that's quite a demanding group. And the firms that supply what they're demanding, that provide the user interfaces, that seamlessly pull together different asset classes and geographic markets will be the ones that succeed.
Yeah, and for me, so client acquisition, it remains really, really important, we know. However, over the last few years, the industry's almost doubled in the UK. I think for me, the focus is really going to be how do we develop those traders further? How do we keep engaging with them? So we've got a new wave of traders. So a lot of them will drop out. How do we actually start really engaging and developing them further?
Well, let me start to say that I think the future is going to be positive. I think there is still a lot of flow that still fly into the traditional banking system, which at some point will be lending more into the trading online. The challenging are going to be on how to tailor-made the platform and to make the access more easy for the new investors, for the new trader, and creating a smooth experience that make the trading more accessible.
But in the competitive edge for all these brokers or payment service providers, is the next step artificial intelligence? As we're all in the business, the processing, the cost, the resources. I'm going to come right back to you, Alessandro. Artificial intelligence for the future. Where is it positioning itself for your company?
I think artificial intelligence already exists in a certain way, will be more and more used in the future. It's definitely helping you to be competitive in an environment where anti-money laundering check, KYC, all these sort of monitoring and control are becoming complex, complicated, and expensive. And that's where I think artificial intelligence can play a big role for our industry.
John?
Yeah, I agree. For AI's a huge potential for us. So two areas we look at is I think we're going to continue to see progression in automated trading, especially in the retail market. It'll be interesting to see how we react to that. And secondly, as a company, we already have tons of MI on our traders, and it's really important how we turn that now into more AI and ultimately personalization. So we've got a huge range of different traders, some very new, some very advanced. And so for me, personalization is going to be hugely important, and AI is going to be a big driver of that.
Brendan?
It's definitely part of the future. I think PyTorch and Python are making it more accessible. There's a company here called Capitalize.ai that allows you to compile basically the English language, which is very cool. We use it for marketing, so we try to predict as wisely as possible revenue expectations for different microsegments. We'll do it for things like onboarding, suppressing, false positive AML alerts and things like that. So certainly part of the future. Exactly how, time will tell, I suppose.
I'm going to move over to another big topic here, blockchain. Blockchain, is it the future? How embedded is it in your organization?
So we definitely see more growth in the demand from all aspects. The providers that we work with, and Zotapay works with more than 500 different providers offering 1,000 different payment methods around the world. So we have extensive experience, more and more demand in the blockchain and cryptocurrency usage. Our merchants, clients, retail brokers, either they need the ability to support wallets, crypto wallets, receiving deposits or payouts. Even sometimes we have settlements, issues with certain banks. So clients ask for us to receive their settlements into the cryptocurrencies and so on. Top-ups. So basically we see more growth demand of cryptocurrency. We also are trying to facilitate the right licenses. So we issue the license for crypto exchange. And we definitely believe in the growth of blockchain and crypto into the day-to-day life.
How would you like to?
I actually share your views in this regard. B2Broker has, among other businesses, we own a crypto processing solution. And we see the growth in the crypto space and primarily the adoption of new blockchains. And I think throughout the years, we will see further development into new blockchains. And that brings value to organizations, whether it's broker dealers or any financial institution. I suspect that regulation will dictate where we go from here.
That's a very good point. 67% of every strategy fails in the world of business. And it's all because of challenges. To our industry, for online trading, what do you see are the largest challenges? Starting with you, Alessandro.
Well, I'm afraid are the usual one that have been the challenge in the last 10 years is regulation. It's the biggest one, it's the biggest threat that we have, and we know how much regulation can change, and will be the ability of the broker to adapt to the regulatory change, the things that is going to make the difference going forward. And also, I think another key point is the ability of the broker to diversify their business with different asset classes, different business line. That is going to play a significant role.
Great. I'm going to go through here before. There's no one from the FCA here, right? So when we talk about regulation, going right over you to there.
Okay, so yeah, I agree on we're in a highly regulated industry. That will always continue to invest in that, especially with those local variations. I would also add, obviously, another challenge for us is if you look at a macro level, the economy at the moment, we know there's going to be there's going to be a reduction in disposable income. So when we talk about the market expanding, there's going to be a growing need to keep educating people in the importance of investing. So whilst the disposable income is lower, it could be a harder job for them to encourage and educate these people.
Wait, Brandon?
I would say the biggest challenge is the UI UX component. So like I said earlier, our very demanding client base and potential client base wants a fairly seamless, simple, intuitive solution that does still give them access to all of the different asset classes, the ones that exist now and the ones that will exist later. And all geographic markets as well. And doing that under a nice, clean platform is a difficult task. So I'd put that at the top of the list.
Great. Avner?
For us, the biggest challenge always will be fraud and fraudsters, fraudulent patterns, and groups of fraudsters that try to attack brokers or online businesses. And they become smarter, they become more efficient, and we need to develop the tools to predict who can be and protect basically the brokers and the money flow, whether it's the regular, traditional AML, financial terrorism tools, or as we see some malicious groups that actually try to set or focus on specific brokers or industries and try to different things until they find a crack in the security patterns and basically try to steal money from brokers, from us, from the payment providers, the banks, whatever.
Great. John?
Well, regulation. I think that's the main challenge. It's been around forever and will continue to be. What I would think in this topic is I think regulation is a great thing, but the key point is how quick a business can adapt to new regulation. We tend to have a lot of red tape within our own organizations, and if you don't react quickly enough, then you get slightly behind it. So I think that's the key point to consider.
We're going to stay with regulation just really quickly. In 2019, the Financial Conduct Authority sent out a survey of how they were going to change the industry, especially for online brokers. Today, that legislation, or Principle 12, as we now know it, will be the consumer duty. All online brokers in the United Kingdom will have to fulfill their obligations. It's about transparency, treating your customers fairly. We've got two broker dealers here. I'm going to start off with Dan. What does that mean for your business?
So for us, we obviously welcome the regulation. Now, FCA, principle-based regulator, has its advantages, comes with its challenges as well. However, for us, this is something we have been investing in for the last year or so, actually. And there's a couple of areas that we're looking into already. We've rolled out our predictive vulnerability model for clients. So that's working with data scientists to put that in action already. I think, as you said, transparency is going to be a huge part of this, and I do agree with that. And that's something we're investing in within our platform as well. So that absolutely will be changes, but it does come with an investment to this.
Brendan?
Sure. Given this is recorded and going to be on the website, I'll give a very CEO-type answer. I do genuinely think the FCA is the most advanced regulator in FX and CFD space. And I think it's right to regulate in a principle-based ethos rather than a strict rules-based one. And I think this is a step further in that same direction. The fact that they're forcing firms to focus on outcomes, not just protections and disclaimers, is a good thing. I think time will tell as far as exactly how they enforce it and what standards are set through anecdote, through example. All the advisors that we work with aren't all that insightful in predicting exactly where the line is. So we'll learn over time what the FCA ends up doing.
For our three other panelists, let me start off with digital assets. Obviously, there's a lot of controversy, correlation. Digital assets is the future. For a lot of people that you don't realize that the S&P 500 in the United States, the correlation between digital assets, Bitcoin, and crypto has almost been 90% for the last 18 months. Obviously, we've seen a lot of controversy in the marketplace with a very interesting company going bust. However, is there a big future for digital assets in your business, Alessandro?
I think so. I think this is going to be the biggest changes for the next 5 years. If you think about, we all run CFD platform. One of the advantages of CFD has been the ability to manufacture a product very quickly, very efficiently, very cheap. Digital asset can bring this type of flexibility on old style, let's call physical security. And that is going to be a big change in the way we settle the product and the way the listed product works. And I think it's going to be a big move for the next 5 years.
I'm going to come back here to John.
We're a wholesale liquidity provider, especially in the crypto CFD space. I believe we're on the top 3 globally. So we believe there's a tremendous opportunity regardless of what has taken place at present. Because I'm a believer that not all apples are bad, right? There are guys who are running operations inefficiently. And when certain things take place, of course, we have the latest scenario. So if you look at a counterparty, and just to bring us as part of this perspective, I feel there is tremendous opportunity in the digital space because there are guys who make markets that are great counterparties where you can count on, where that risk mitigation aspect, it's already like priced in to some degree. We deal with fantastic makers and therefore our offering is very strong. Of course, what just took place, it's not necessarily, the best thing to happen for the industry. But I think there's still great opportunities because we cater to this business and we see tremendous volumes going through.
Avner?
Yeah, I think in the end it's the question whether there would be a demand or not. And I believe that the youth of today, the children that were born in the last 10 to 15 years, would hold a lot of their assets into digital assets, cryptocurrencies, and will use more and more even NFTs as a cultural-based transactions. For example, if they feel connected to a certain brand like Nike or even a whiskey, you don't open a whiskey which is 50 years old. The same, you keep it or you trade it, some people. The same you can do with an NFT. And today I see more and more people, my children would get even a gift card based on NFT that they can redeem and play a game, a social game or whatever game online or via the mobile. So the youth will demand more digital assets because right now they're using it way more than us. The traditional banking industry are using it. And in the future, definitely, brokers and CFDs would need to know how to support also this big demand.
I'll jump on that one if it's all right, Gerald.
Go ahead.
I think the story that everyone seems to be assuming is playing out is that digital asset firms and blockchain companies will eventually swallow up fintech, trade tech, banking. I see the opposite happening. I think a lot of the most exciting prospects, upstarts, are firms that have an expertise in FX in particular, that are taking that technology and that expertise into digital assets. And I'll give an example. Clearing fees in institutional FX are $3 all in. And that includes third-party compression where it's necessary. per million. So in FX, obviously, we quote on a dollars per million basis. In digital assets, they're still quoting fees on a basis point basis. And 1 basis point, the smallest denominator there, is $100 a million. We're just still operating on totally different scales. So I think a lot of the most exciting moves are FX firms in particular and OTC fintech companies moving their expertise, their technology, their scale into the digital asset space.
Pricing. Everybody comes in with respect to the stakeholders, whether it's the customer, whether it's your shareholder, of what's the future for online trading when it comes to commissions. Google Docs, Microsoft. Microsoft has always been charging a license. When Google Docs came in with Excel as well as their own document, it was all for free. And everyone said that the industry would change when it came to that category of business. Yet Microsoft is still making a lot of money. So the question is, when it comes to online trading and zero commissions, is that the future? Is we're headed to the bottom? Is there a race to the bottom? Starting with you, Dan.
Yeah, it's been an interesting space over the last few years. So obviously we saw this primarily started in the US with the likes of Robinhood going commission free. We've seen a lot of other countries and big players following suit. It's going to be questionable whether some of these models are sustainable. So obviously for this to be sustainable, you either need your clients to trade more and be more active. That's one way. There's another possibility they trade into other products, or you find brokers charging in the other ways. So there are options available there. I think there has been a race to the bottom, but personally, I think this is going to change over the next few years. And the challenge is going to be, how do you actually monetize and create more value for these clients?
Brendan?
Yeah, you can't go negative. You know, there's play to earn models in gaming. There's no reason there couldn't be a trade to earn model. The Robinhoods of the world that earn their revenue on a payment for order flow basis. There's no reason a startup couldn't pay some of that payment for order flow on to the end clients that are creating the order flow. So I don't think zero is the floor necessarily.
Would anyone else like to jump in from the panel? I know it's a little bit outside the category.
I think it's inevitable. In the end, commission-free, it's not necessarily good, and the users become the asset themselves, and brokers will have to make money some other way. But because a few big clients, especially in the United States, like Robinhood, already started with that, and you see a lot of youth, once they can start trading, the first place they go to open their first bank account is Robinhood, is not Bank of America. So today, I'm saying that's the leading platform. It's not, my personal opinion, it's not necessarily good. I think a broker, payment provider, they need to earn enough decently in order to operate well for a long-lasting relationship for the long run. However, I believe it's inevitable in the end, commission-free trading. Hopefully payments too.
John, would you like to?
My take on this is, I think we have to see where Robinhood goes from here to see if more will follow this business model. It's sort of a benchmark to some degree because they've been very successful at what they've done. So that sort of puts it into perspective. Where are we going? And from here, how popular this will become.
I'm going to shift gears here, but go ahead, Alessandro, if you want.
No, just quickly, I think the future is more in the hands of what is going to happen on a regulatory point of view. Because payment for order flow is under scrutiny not only in the States, it's banned in the UK, it's banned in Netherlands. The European regulator is having a look for the certificate business, other product. So I think from a regulatory point of view, not sure it's going to be that one the future. And really the challenge, I agree with you guys, is going to be how to educate the client to understand the value and to keep the client and monetize him despite if it's a zero commission or not.
How about shifting over to e-payments? What do you see in e-payments as being the future?
Well, I think no one is using cash anymore in our normal life. Honestly, I think this is going to be inevitable, and probably brokers are going to look any possible way to get the cash or the equivalent of cash or e-cash from clients. So for sure, it's going to be the future.
John?
Well, I think the trend is more on the stable coins. That's where I see a lot of growth. We have a crypto processing solution, so we see this kind of volumes going through are quite interesting, and primarily we see a lot of interest in regulated stable coins nowadays. So it's a very interesting arena, and I think that's where we're going.
Avner?
Yeah, we see more and more use of alternative payment methods and e-wallets rather than cash-based or even credit cards. And I think even though today, by 2025, the majority of online payments would be non-credit card based. In the remote regions like Indonesia, Malaysia, where a POS machine can cost $200, which is a monthly salary for a fisherman, and just to have a QR code to receive money from any user, it's much easier for them. As a lot of people and populations in Africa, for example, they consume internet via the mobile. So mobile money via Airtel, MTM, Orange, and other mobile courier are the main processors and banks rather than the traditional cards that we know in the West. I also do not underestimate the Web3 consumption, where you have an online browser with your wallet. With one click, you will be able to pay and to make a transaction. And I think we all need to be prepared, especially us as a payment provider, with the proper technology to support this in the future years.
How about trends? All of you are in different categories and you're basically out there in the international space. Are there any trends that are really relevant here? Starting with you, Alessandro.
I might be a little bit repetitive, but I think the personalization that Dan already brought in, it's definitely a trend. And people want easy access. We are not in the world anymore where people want complicated platform or sophisticated product. And so we need to be good at making the platform appealing for that particular cluster of client. I think this is going to be the next trend for sure.
Dan?
Yeah, so as a company, we've been diversifying our product range over the last few years. And for us, we're definitely seeing a trend where you may see a trader coming in on one asset class, but they're going on to other assets and products. And that's something that's really important, not just only for the client, but for us ourselves. So we're looking at ways we really should be kind of serving the client, not just the account. So you're looking at the client's overall needs there and how to service those based on kind of not just outside one specific asset class.
Brendan?
You're asking for trends in payments or just fintech in general?
Any trends that you see in online trading that basically have surprised you or do you think are going to pick up steam?
Yeah, so I definitely think there's momentum in the direction of one-stop shops, particularly for the active investor demographic that I've been referring to. And I think the firms that integrate different asset classes well will be the ones that come out on top. There's a lot of companies that would claim to be on the path for super finance app. And I think it's interesting to see how this evolves. There's a Revolut type way where you start with the wallet and the payment, which, the side of the spectrum that I would consider arguably the simpler parts, and then migrating towards trading, more active traders with bolt-on solutions for crypto and for shares. And then there's us, I will acknowledge this is a fairly self-centered perspective on things that are starting with what I consider inarguably to be the super users of trade tech. FX and CFD clients, traders, are leveraging significantly. They want to trade 24 hours a day. They expect small millisecond latency on their transactions, zero slippage. So firms that are starting on that end of the spectrum carry with them the credibility of satisfying that super user demographic first. So as firms like FXCM migrates more towards the everyday personal finance solutions and functionality, I think we will have a very compelling story to tell and a compelling offering given our pedigrees at that active user end.
Avner?
Yeah, the trends would be first Africa. For us is one of the biggest growing markets. And a lot of users are coming there with money, non-bank populations, so-called, but still with a lot of money. We see a lot of demand in the cryptocurrency as well. So that's one of the trends, growing trends recently. Yeah.
John?
I see many broker dealers primarily that we serve interested in multi-asset offering. I think that creates more engagement with and a longer life cycle of your client, so they get committed to longer periods of time, and that brings value. I think one of the main trends we've seen in the last couple of years, it's primarily simplicity on a trading platform. That's what everyone is looking at. And I don't know to what extent you guys may agree, but recent developments with MetaQuotes, who had a market share pretty significant in the retail space, is changing or will change the landscape. People in the past were used to MetaQuotes to some degree, and these developments are going to naturally change that tolerance that client used to have towards just one platform. And now we see a lot of brokers seeking more than one solution. And that's where the simplicity of the trading platform kicks in. I think that's...
But strategically, as the marketplace changes and tomorrow becomes more competitive, 10 years ago, you would rarely ever see alliances or partnerships, especially if a broker and a broker got together to expand into new markets. However, the marketplace has changed even on the technology. We're seeing more alliances and more partnerships. Is that the future for your company, Alessandro?
Well, you always need a balance between doing the things in-house and doing the things with a partner. Sometimes partners are better than you. Sometimes it's better to control the entire chain and doing in-house. I don't think we will see an extreme going in one direction to another. I have to be honest, our world has been historically very close, tend to do the things in-house. So I feel, especially in areas like payment or cryptocurrency, there will be more and more partnership coming because you want to play with the specialist rather than building only the things in-house.
Dan, alliances and partnerships.
Yeah, so fairly similar actually. So for us historically, we primarily did everything in-house. I think, as I mentioned earlier, we're diversifying our product range, slightly our target audience, and with that, there is a greater need to collaborate more with external tech partners. So I guess a particular part I'm excited about, I look around some of the partners down here, is there's a big movement around taking really sophisticated trading tools and analytics tools, which historically kind of lived in the institutional space, and we're seeing a bit of a trend where we're trying to make these tools more retail friendly, and it's certainly an area we're looking to, where possible, to collaborate more with external partners to actually really complement kind of our value proposition.
Brendan?
Yeah, absolutely. Collaboration, integration is part of the future. Customers want more than any firm could genuinely specialize in or cater to. And beyond that, even building all this technology is cumbersome and very expensive. Building a full stack, self-clearing equities offering is a Mount Everest of technology and cost. And when you're done, congratulations, you can't charge any commission because that's where the competitive landscape has gone to anyway. So why reinvent the wheel? A lot of this technology is commodity. There's tons of B2B solutions. So it's a matter of integrating with the ones that have the best offering, at least sufficient offering, and then picking what you're going to specialize in and differentiate there.
Avner?
Yeah, definitely, I agree. Zotapay based and lean 100% on partnerships. So for me, partnerships is everything. And we try to build a bridge between all the different payment providers around the world, especially in the emerging markets, into one platform, into one API. So we do not process any transaction ourselves in a local region, but under one cashier page, we might have 10 or maybe dozen different payment provider on the same wallet, on the same solution that can compete on the transaction. We can bounce between the different, we can have higher approval ratios because of that, higher availability, time frame, and splitting the money or the risk between each and every one of them according how it's more efficient to split and spread between several providers on the same market, especially in those regions. So partnerships for me is everything. So that's what we do, and totally believe in that.
John?
I certainly believe that partnerships are key to growth in many operations. you cannot believe that you're going to achieve everything on your own. I mean, in-house development, of course, independence is everything we all look for. But reality is, it's not that simple. Just we're a tech company. I can tell you it's not easy to find people. Let's just start from the very basics. So you need to have some form of strategic partnerships out there in order to speed up your growth processes. It is essential that obviously you choose the best partners within the industry that you're selecting for. But yeah, I think it's key to every business. You just can't do it all.
Here's another term that came up a lot right before we were preparing for this, which fintech. You hear that word all the time. However, really, what is fintech? I mean, has it not been around for 5, 10, 20 years? But when it comes to broker-dealers, are you a broker first or you're an IT company or vice versa? I'm going to start with Dan. Dan?
I would say we're traditionally a broker first, but absolutely we got to move with the times, and with that, with not just only our target audience, but with their needs. And to be able to do that, you need to be a fintech led. So for me, it is a combination of the two.
Brendan?
I just missed the second part of the question. Are you a broker first, or what was the?
Are you an IT company first, or are you a broker first?
Well, maybe this sounds like again a typical CEO answer. We're customer first, so I suppose that makes us a broker first, and then the technology has to accommodate the customer need. So we're a relationship company. Our customers are who we're trying to satisfy in everything we build, do technology-wise.
Alessandro?
Well, we are a young business. Definitely we are, even if I look at our hierarchy, our organization from an HR point of view, for sure we are a fintech first. Obviously, we are a broker, and we are regulated as a broker, so that's at the end of the service that we're going to offer. But I think the technology is going to play more and more and more a significant role in all our business. And inevitably, whenever we want or not, we will all become fintech.
So I'm going to turn a little bit about the future for each one of your companies and your strategy. Let's look 5 years from today. Where are you going to be?
I think...
Aside from being here.
It's slightly older. No, I think we are very strategically clear where we're going, and that is we continue to develop technology for financial institutions, and I think we're capturing more and more market share year by year in the liquidity space. So I believe we will be the likes of some other brands that are within this floor.
Avner?
We try to build an ecosystem for payments, one-stop shop, both for payment processing in, out, embedded banking. That's something that we now focus more and more. IBANs, issuing IBANs, e-wallets, and basically to facilitate a merchant need, an online business need, to create a stickier product that they won't need to go anywhere else. And basically to build an ecosystem for payments, a house for payments that the merchant can come and use whatever payment product it would be, as long as we do the compliance. And I think that's the real key, to know your customer, to do the right, proper compliance. Once it went through all the underwriting process and the compliance processes, it's very easy now to add more products, whether it's embedded banking, or payment processing, or payout, or remittance, or currency conversion. For us, it's less relevant, the product, more the compliance.
Brendan?
Well, I hope in 5 years we're back here talking with you, Gerald. I'll try to answer the question without giving too much of FXCM strategy away. You know, I hope FTX and examples like it are a thing of the past in 5 years. You know, I know all the facts aren't presented yet, but I hope there's criminal prosecution on the back of this. It certainly seems like that's deserving. I hope there is more kind of scrupulous attention to the money that's chasing around investment options like FTXs of the world. You know, I hope the money that is looking to pour into companies like that are making better sure that there's proper governance in place. I expect that firms like FXCM will cover the need that apparently we haven't. In other words, companies or clients rather are going to the FTXs of the world, and FTX is just one of the names. Instead of coming to the regulated, well-established brokers for reason, and I think we are in the process of crossing that reason gap and providing the solutions and the flexibility and the, the forward-thinking offering that a lot of the crypto exchanges have provided for customers, and we end up taking that part of the tradable world into our realm as just another asset class, and we've done it before. We trade all the asset classes now, so adding digital tokens and blockchain type settlement processes to our mix is quite straightforward. We already know regulation, we already know proper corporate governance, so that's where I hope we are in 5 years.
Dan?
So 5 years time for us. We spoke about, obviously we're a broker, but in addition to that, we also see ourselves as a content provider. So with the content, I think it's around 2.5 million people have seen our content over the last 4 months. So we have got the distribution, and for us, we're going to continue focusing on that as well. And it's about empowering the next wave of traders. So not only just to open the door to them to actually start trading, but as I said earlier, we really want to empower them to actually progress as traders going forward, not just through one asset class, but understand kind of their portfolio performance overall and really educate and help them with that.
Alessandro?
I agree with Dan for sure on the content element. I just want to add that I expect a company like Capital in the next 5 years delivering an offer where client will access to more product with less leverage, very likely, with the ability to personalize more, not only the user experience, but also the product and the way they trade. And we listen client constantly, and this is what the people really ask on a day-to-day basis.
And now I'm going to turn it out to the floor. If anybody has any questions for our panelists here. Can't see very good with the spotlight on me. Are there any questions? Yes. Actually, hold on one second. We got a mic.
Hi, thanks very much for a very interesting panel. I'm Oleg from CoinRow. One question, what is something in your industry that everyone at the moment is missing? Like a trend or something happening that people should be aware of but that they're missing?
Alessandro?
Well, we're missing a lot of things because it's difficult to do everything in one place. I think in Europe especially, the one-stop solution is something where people want. The Charles Schwab of Europe doesn't really exist. At pan-European level, there is a lot of players individually operating in the country. I think this is going to be something that probably the people want.
Dan?
Yeah, fairly similar. So we've spoken about it before. It's the experience that you get across that one-stop shop or across multiple different products. I think customers' demands are growing, and so we need to be the cutting edge of that CX offered around there.
Brendan?
It might not be the sexiest answer, but I would say progressive web apps. I think that's a big part of the future. It decouples the applications, mobile applications that we put in front of our customers from the app stores themselves, and therefore decouples it from the app store economics. I think it'll evolve a lot in helping facilitate more complicated functionality that's usually only available to native apps. So I'd say that.
Avner?
Yeah, I think local licenses would be multi-license corporations with 20, 30 different licenses in the local markets with a local presence. That's what we're missing, although there are very good big players, like all the panel here, my fellows here, my colleagues, great brokers. But I see maybe more local presence, teaching users how to trade better. And I also have a question to my fellows. I wanted to understand, I really don't know, how the change in leverage affected the users. Users traditionally, or that's what I thought, wanted high leverage tools. And since the regulation has changed last couple of years, so how do you see it from your end?
And John, want to finish this up there?
Well, On your question earlier, I think, more advanced technology supporting operations, it's really the key to further develop a business. And that's where companies like us, we develop a lot of things, listening to clients' needs. You tell us, we need ABCs, we accommodate that through our roadmap on that front.
Any other questions? I believe, no. Yes, sir.
Is it not working? Hi, it's Tom Higgins from Goldeye. You were talking about Africa. Is the African market going to be served by local brokers in that region, or will you big boys be serving that market as well?
Good question here. Should we start with Alessandro? I'm going to keep you under pressure of 30 seconds.
I think Africa is an interesting market. It's a market that brings you a lot of challenge from a payment point of view. From a KYC point of view, it's complicated. I think global broker will start to look at Africa with more attention. But it's an hard market to play with, and I'm not sure the profitability is going to be the best one in the short term.
Dan?
Yeah, it's the combination of the two. I think there could be some global players entering certain markets in Africa, but they do need kind of the local players to drive that forward as well. So you may see some more collaboration that we've spoken about earlier.
Brendan?
Thanks for the question, Tom. It's good to see you. I think it's going to be a mix and match. I think similar to Latin America, the Middle East, there's going to be a contingent of both local players and then foreign ones that come in with local offices or just address it from abroad.
As not.
So I think always the global players, the global brands has the upper hand. Users and people love brands. That's why we buy all the brands that we buy. And if you see a big broker that has advertisements in all the different sports events or whatever you see, watch TV, naturally that's where you go. And it's inevitable also for local players to raise and be successful. But then in the end, the global brokers will probably do an M&A. In the end, it's how the market will consolidate in the end.
John, we're going to let you finish this up.
Well, hi, Tom. I think the key will be risk assessment. What sort of risk these institutions wish to run? It's a geographical area. It's a demographic that is complicated from, KYC standpoint. So it's a bit of a challenge. I think every business needs to wait it out.
And for that is the last question of the day. And I would like to thank all our panelists. They will be here for the next 24 hours. I'd like to thank Finance Magnets for organizing this. I hope you enjoy the rest of your day. And thank you for attending.